Hi friends, welcome back to my channel. Today I'm going to tell you about another technical analysis, how professional trader make $40,000 without any loss. So every non-professional trader should need to know about it. So before starting the video, please subscribe our channel to get technical analysis video first of all. So today I'm going to share 15 minutes sculpting price action trading strategy. And I will reveal how to day trade zones in multiple market scenarios like stock, Forex and crypto market. The major difference between professional traders and non-professional traders is that the professional traders use the very rules and steps-based approach towards traditional, while the novice traders trade based on their good feelings. Professional traders will try their best to formulate a systematic trading strategy that completely eliminates emotions from trading. Today we will look at such a strategy. With this strategy, my goal is to give you a systematic approach towards price action trading. Now, price action trading is very subjective in nature. This means that if you show the same price chart to two different individuals, both of them may differ in their analysis. One might predict that the price will go up, while the other might feel that the price will go down. With this strategy, I want to show you how you can create a rule-based system around a subjective matter like price action. So without any further ado, let's get into the strategy. The strategy is a simple trend line breakout strategy with added rules and steps so that you can avoid false breakouts that commonly occur while trading. Trend lines are nothing but simple lines that are created by connecting the highs and the lows of the price. In an uptrend, we will create a trend line by connecting the lows of the market when the price breaks below this trend line. Let's look at the rules for selling. So for selling, the first step is to identify an uptrend. An uptrend is identified when the price makes higher highs and higher lows. We will create a trend line on the uptrend by connecting the swing lows. The second step is to wait for a trend line breakout. In this case, we want the price to break below the trend. When the price breaks below the trend line, it signals that the price may start a downtrend, but we will not enter a sell trade just yet. The third step is to mark a support level. We will look at the trend line and find the last touch that occurred before the breakout of the trend line. We will extend a line at this point and mark that as a support level. Now, the fourth step is to wait for the support level to break. When the price breaks below the support level, we can confirm that the price has found momentum in the downtrend and we can expect a big move on the downside. The fifth and the last step is to enter on the retest. After the breakout, we wait for the price to retest the support level. When the price reaches the level, we expect the price to face resistance at this level. So when the price resists this level, we will enter on the first red candle that appears. Now let's look at a sell example to understand the strategy. So here we can clearly see that the price was in a strong uptrend. We see that the price was making higher highs and higher lows. So we create a trend line on the trend line on the uptrend by connecting the swing lows. Then we wait for the price to break the trend line. The price breaks the trend line on this candle. This breakout indicates that the price may make the downwards move, but we are not too sure about. So we wait. We now create a support level. We do so by extending a line from the last touch on the trend line before the breakout. Now we want the price to break below this support level. The price breaks the support level on